Welcome to Yahoo Finance Live. I am Shauna Smith alongside Dave Briggs, and let's get you up to speed on everything you need to know today. 3 p.m. Eastern Time. Facing the fire, TikTok CEO grilled in a much-awaited congressional testimony. Lawmakers painting a picture of a company linked to the Chinese Communist Party and posing a, quote, grave threat to American life. We are live on the Hill as this all unfolds.
Plus, we keep an eye on slumping block shares after short seller Hindenburg publishes a scathing report on the group it alleges Jack Dorsey's company is facilitating fraud. We'll speak to an analyst about how you should play the stock in just a bit.
Getting a tailwind, stocks moving to the upside today as investors bet on a quicker end here to rate hikes. At least that's what it seems. Comments from Fed Chair Jay Powell and Treasury Secretary Janet Yellen crossing over each other yesterday, and the stock market having a tough time decoding it all. We will tell you what it all means for you.
But first, a big day on Capitol Hill. TikTok CEO Shou-Zi Chew getting grilled by the House Energy and Commerce Committee. Take a look.
We do not trust TikTok will ever embrace American values.
That's not enough for me. That's not enough for the parents of America.
Do they have access to user data?
Why, if you had nothing to hide, would you need to downplay the association with ByteDance in China? You damn well know that you cannot protect the data and security of this committee or the 150 million users of your app.
Mr. Chew, your company destroyed their lives. Your company destroyed their lives.
Do they, yes or no?
I'm not sure because...
Yeah, whoa, come on now. You're not sure?
I really am not sure.
Remember, you took the chair lady, she said you got to tell the truth, okay?
Your platform should be banned.
Bam. For more reaction, we turn to Yahoo Finance's Rochelle Akufo. Nice to see you, my friend. This is the rare bipartisan outrage.
Indeed, there were very, very few voices, if any, actually supporting TikTok today. And one of the things that we were watching going into this hearing was just before the hearing, just a day before, we saw that Shou-Zi had really highlighted this idea of having 150 million monthly active users in the US, 5 million businesses on there as well, mostly small and medium-sized businesses. This couldn't have backfired harder. The way that this was looked at, Chair Rogers said this really set the tone in terms of the user numbers actually meaning more urgency for Congress to act. So what could be good business for TikTok is definitely not the play that would have been helpful for him today. Also want to talk about the 4 commitments that Shou-Zi said he was going to lay out for the company. He said prioritizing safety for young users. Now, we did also see some powerful content played out, especially of a 16-year-old teen in New York who committed suicide after watching some of the videos that ended up coming up in his feed. He was definitely pressed on that, and whether or not he was responsible for the algorithm behind it, really trying to get him to take responsibility. Lawmakers looking for yes or no answers, looking for certainty. Now, the second commitment was that the app will remain a place for free expression and will not be manipulated by any government. Now, we know that he had a very hard time with this. Lawmakers really hammered into TikTok's relationship with ByteDance, what it would do, and if there was anything they could do if compelled by the CCP to share that data. We saw that lawmakers were not convinced that any guarantees that Shou-Zi could make in this hearing he could actually uphold based on Chinese media laws. Also, transparency was number 4. Now, I spoke to Representative Obernolte, who is a former game video producer. He's also the only member of Congress with a degree in AI. He didn't seem convinced that even with the assurances that TikTok could offer, that the data could ever be protected or that it wouldn't end up reaching a third party. So a lot of convincing that Shou-Zi had to do today. It doesn't look as though he pulled it off. And we do know that the other issue was this firewall protection. Now that brings up Project Texas. Texas named for Oracle, which is where the company resides, the headquarters of Oracle resides. Now they were meant to be this sort of buffer, provide this safety here. And Chew testified that 100% of US user traffic is being routed to Oracle and USDS controlled infrastructure in the United States. Again though, a lot of lawmakers still not convinced that that goes far enough or that they can separate themselves enough if compelled to try and sell off parts of the company. China already saying they're not going to stand behind that if someone tries to compel ByteDance to sell its stake in the company. One thing, though, this is a bigger issue than just TikTok. There have been more calls for more national transparency laws and data security laws that cover all of the social media companies, but TikTok in particular drawing the eye because of that relationship with China. Another issue they wanted to look at was the ownership structure. They wanted to know sort of the role that ByteDance has in TikTok's everyday. They asked if they shared the same lawyers coming into this testimony. Xu admitted that they did. So it was very hard to sort of separate the two. And we did see that Xu testified that 60% of ByteDance is owned by global institutional investors. He named BlackRock, General Atlantic, and Sequoia, about 20% by the company's founders, and the rest owned by employees, including, as he said, thousands of Americans. A lot of people, we also heard questioning about the percentage of revenue from TikTok that goes to ByteDance. And he said, of course, this is a private company, TikTok is, and that he's not obligated to share that data. Lawmakers not happy about that. They wanted at least some kind of ballpark figure, but Xu unwilling to give that at this time. Guys?
Yeah, Xu certainly prepared well for this. Didn't give many of the answers that lawmakers were hoping to hear today. Rochelle, great stuff. We'll check in with you in a bit. Thanks so much. And Dave, we talk about so many of the issues at hand here, and TikTok CEO went to Capitol Hill really trying to convince lawmakers that TikTok should not be viewed as a national security concern. From my views, I don't think he did a good job convincing lawmakers of that. You saw the outrage inside that room. It was very fiery. The exchanges, there was a lot of emotion within that. And he was saying, and Rochelle just referenced this here, whether or not TikTok is prepared if it needs to divest from ByteDance. And he simply said that ownership was not the issue. He didn't give many concrete answers, didn't give the lawmakers exactly what he wanted to hear, largely what we're expecting from today.
I thought it was a devastating day for TikTok, nothing short of that. I thought it was a terrifying day as a parent to watch this hearing unfold. Even as a citizen who's on the app but doesn't use it, it was rather scary. They in no way answered the questions, the fears that parents and congressmen and national security officials have. In fact, our U.S. Secretary of State Antony Blinken said today, TikTok should be, quote, ended one way or another. There are different ways of doing that. Now, their chief argument seemed to be, no, we're not doing these things that you fear we could do. But the fact of the matter is they could. And that's the fear. If, in fact, China decides to weaponize TikTok, they could. There is nothing stopping Chinese officials from accessing U.S. user data. And I will say this major caveat. A lot of this hearing could have been directed at Facebook, at Twitter, at Reels, at just about any social media platform. But again, the difference is those are not owned by China and not subject to review by Chinese communist officials. Harmful content exists on all these platforms, which was really a focus of today. And that should be spread out among all these social media platforms, not just TikTok. But again, this is one that implicates our national security. It's controlled by the Communist Party. Nothing short of a devastating day for the platform. And I think will lead to a ban.
You know, I was skeptical of a ban going into this. I am more convinced that maybe we will see a ban in the future. It's going to upset a heck of a lot of people. If TikTok, if those numbers are true, 150 million Americans, they say, use that app. That is a heck of a lot of people on just one single app. And Dave, you mentioned the fact that we could be using this types of the lines of questionings towards many of the social media, all the social media CEOs. And that's something that you did point out during this, during the testimony today, saying that U.S. social media companies do not have a great track record when it comes to protecting user data. Also, Xu was asked several times that if China did have access to U.S. data. Let's take a listen to what he had to say.
Today, all U.S. user data is stored by default in the Oracle Cloud infrastructure, and access to that is controlled by American personnel.
ByteDance employees in China, including engineers, currently have access to U.S. data?
Congressman, I would appreciate this. This is a complex topic. Today, all data is stored by default.
No, it's not that complex. Yes or no, do they have access to user data?
After Project Texas is done, the answer is no. Today, there is still some data that we need to delete.
But we've heard already from the ranking member that he doesn't really see that Project Texas is going to be useful.
Wouldn't give that yes or no answer, which lawmaker after lawmaker wanted to hear today. And I think Representative Rochester put it perfectly, Lisa Rochester, saying that this testimony raised more questions than answers. And I think a lot of people walked away after listening to this pretty concerned with some of the data that TikTok has access to.
One of the most terrifying things in this presentation was a video that was up on the site for 41 days. It was a video telling a story of a mass shooting on this very day at this hearing, naming U.S. Congressman, naming Kathy McMorris. That video was up prior to the public announcement of this hearing, yet had the date on it. It was up until today when the hearing, they took it down. Last thing I'll say is, most people on TikTok that I've spoken to do not care about their data being compromised. We will speak to a panel of influencers about their feelings on the subject, which totally matters a lot. Do they care about potentially their data being compromised? I think mostly likely the answer is no.
I don't, but they should. And I think that was clear from today. All right, let's get to another top story, and that is the movement that we're seeing in Block today. Shares plunging off just about 15%, so off the lows of the day with just under an hour to go in the trading day. Now, this drop comes following a report here from known short seller Hindenburg made serious accusations against the company, accusing Block of having fake or duplicate Cash App accounts, avoiding regulations, and embracing criminals. Hindenburg stated that its conclusion is that Block, quote, misled investors on key metrics and embraced predatory offerings and compliance worst practices in order to fuel growth and profit from facilitation of fraud against consumers and the government. Joining us now with more on that, Yahoo Finance's very own Ines Ferre. And Ines, Block did not waste any time. They fired back at these accusations, calling them all untrue.
Yeah, that's right. And that statement from Block came at around 1:45 p.m. Eastern time. The Hindenburg report was published this morning prior to the market open, and you saw Block stock down as much as 20% when the market opened. Then in the afternoon, we got this statement. You saw part of the statement that you just read also, with Block saying that they intend to work with the SEC and explore legal action against Hindenburg Research for the what they call factually inaccurate and misleading report. Now, this report is a very damning report. I mean, it has a scope of allegations in it, including that Block allegedly gouged merchants on fees, that it wildly overstated its genuine user count and has understated its customer acquisition cost. Now, Hindenburg Research, this is the same short seller that about 2 months ago levied accusations against Indian conglomerate Adani Group back in 2020. You'll recall that Hindenburg put out a report targeting the EV maker Nikola. Remember, with that reference to the truck that was rolling downhill. So certainly a broad allegations here against Block. We saw the stock lowered this morning. Then it paired some of those losses. It was down about 10 or 11% around midday. Now it's down about 15%, guys.
Yeah, again, at the core of this, that they allowed criminal activity and fraud, and a former employee told Hindenburg 40 to 75% of their accounts are fake. Ines Ferre, thank you so much. Great reporting. Markets trading higher the day after Federal Reserve Chair Jerome Powell signaled the Fed's rate hiking campaign may be nearing an end. Joining us now to discuss what might be the next catalyst is Jeffrey Kleintop, Charles Schwab, Chief Global Investment Strategist. Good to see you, sir. So what might be that catalyst?
Well, I think it's a return to inflation. You know, Chairman Powell talked yesterday about how the path of inflation going forward may be bumpy. I think that's an understatement. We just got some of the data from a couple of major countries in the last couple of days here. We just got yesterday the inflation data for February for the UK, 1.1% for the month. In France, late last week, that was 1%. I think on Thursday of last week, we got Spain's inflation number, 0.9%. These are hot numbers, suggesting that whatever the disinflationary impact is of the current financial worries, there's still a stubborn inflationary backdrop. And I think that's going to be the major issue that still confronts this market in the weeks and months ahead, even as some of the financial crisis concerns begin to ease.
Yeah, and Jeffrey, talking a little bit more about some of the stress that we have certainly seen in the banking sector over the last couple of weeks. Treasury Secretary Janet Yellen was asked about this, was asked about blanket insurance for all U.S. bank deposits. Let's take a quick listen to what she had to say, and then I want to get your reaction.
I have not considered or discussed anything having to do with blanket insurance or guarantees of all deposits.
Jeff, that initially put pressure on the market yesterday. We saw all three of the major averages fall on those comments. How worried should investors be when they hear something like that from Secretary Yellen?
Well, in part, it clearly a sign that they weren't gathering momentum towards moving in that direction. In fact, they got a pushback from the Banking Association saying that wasn't necessary. So even the folks in the industry saying, we don't need to go that far. Actually, the backstops that have been put in place in conjunction with the Treasury, the Fed, and the FDIC seem to be effective in dealing with deposit issues. But clearly, there are still some banks in crisis. I don't think it's a banking crisis, however, and it's one that seems to be contained to relatively small U.S. banks. I'd note that European banks have actually posted gains so far this year, outperforming U.S. banks by 13 percentage points year to date, despite the Credit Suisse issues. So the idea that this turns into a global financial crisis because of some, unwillingness to backstop all deposits, I think is off base. I think we've probably dealt with the bulk of the issues already.
And Jeffrey, Chair Powell saying yesterday that the path forward for rate hikes might not be as linear as it now seems. Listen.
It's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time. And in principle, if that means that monetary policy may have less work to do. We simply don't know.
And your guess about how this impacts credit conditions and perhaps the economy as a whole, which he said would be modest.
Well, we'll have to clearly watch the lending data. Already, loan demand has been falling. The economy globally, I think, is in a mild recession right now, so it's not surprising to see lending pulling back. We also know that banks have been tightening lending standards here and abroad, and so that will have a lagged effect on slowing economic growth. But the reality is, in the last few months, we've seen economic data surprising on the upside everywhere you want to look. In the UK, Australia, in Germany, here in the US, data is becoming consistently better than expected, bunking these ideas that we're in a deeper or declining economic environment. So sure, the banking stresses could lead to more of a downturn, but in the near term, we've still got these inflation issues. And that's why you're hearing central banks are staying focused on inflation with further hikes, confident they can deal with financial stability using other tools. Today, the Swiss National Bank raised rates by 50 basis points, despite a few days ago, Credit Suisse being the epicenter of global financial turmoil. Of course, Norway's central bank also hiked today. And we heard from the Bank of England today with another 25 basis point rate hike. I think the central banks around the world are much further away from rate cuts than many investors have perceived.
So, Jeff, how should investors play all of this?
That's a great question. So I think we're moving into an environment, we're still in an environment where quality rules. I think investors should be focusing on companies with strong near-term cash flow. These weren't companies you wanted to be in the 2010s. They have really performed well now. Low price to cash flow stocks have been outperforming year to date. They outperformed last year. They've been outperforming since August of 2020. When we were in the midst of the pandemic. I think that's the theme that's true across sectors and across countries, leading to consistent outperformance. You're going to find a few more of those in international benchmarks than in the U.S., but overall, those are the themes you want to focus on.
All right, Jeff Kleintop, great stuff. Thanks so much. We are just getting started here on Yahoo Finance Live. Coming up, troubling times for TikTok CEO Shou Chew testifying before Congress today as calls grow for the app to be banned. Yahoo Finance's Rochelle Akufo will be speaking to a number of lawmakers on Capitol Hill and get their reaction to the hearing. Then we will also speak with Panera Bread CEO on how the company is fighting inflationary pressures, what he's seeing in terms of consumer spending. And Apple's push into the movie theater, the company looking to spend $1 billion in an attempt to get its movies onto the big screen. We've got all that for you straight ahead.
Our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Jerome Powell expressing confidence in the state of the banking sector following yesterday's latest rate hike. But if the banking crisis again rears its ugly head, could it have implications for our nation's debt ceiling and potentially our credit rating? The national debt continues to rise, currently sitting at roughly $31.6 trillion. Joining us now to help break down some of the potential ripple effects from the recent woes in the banking sector is Stifel Chief Washington Policy Strategist Brian Gardner. Brian, always good to see you, sir. If you can connect the dots for us from the banking crisis potentially to our debt crisis and the ceiling, as well as, let's just say it, our credit rating as well.
Yeah, so we have the debt ceiling that has been breached. It's going to have to be raised probably sometime this summer. Treasury has some tools to manage the situation, but those don't last forever. They run out of them. And that X date, when they run out of those tools, probably this summer. We still don't know exactly when, but the banking situation does play into that. We're probably going to see a slowing down in the economy, a little contraction of credit. So receipts to the government, those cash flows are probably going to slow. Now, we're so close to that X date. Does it change it by a month? Probably not. We're probably talking days and weeks, but it does limit the time. One, it limits the time that the government has to pass a lift in the debt ceiling. And the other is that it just heightens the political risk that if Congress fails to act in a timely way, like I said, we're probably going to see some kind of credit contraction and a slowing down in the economy as investors and businesses get more cautious. And a problem with the debt ceiling is just going to add to that. So there certainly is added political risk as the two come together going into the summer.
Brian, what about the debt ceiling bill becoming a vehicle potentially for a banking bill? Is that something that could potentially be on the table?
It could be. I mean, we really need to see how things play out. But, a debt ceiling bill is going to be a must-pass piece of legislation. Now, for a banking bill, there is a fast-track mechanism to increase deposit insurance. And that would not be amenable. So it's just deposit insurance, nothing else, fast-track. I think we're still a ways off from that. Let's just say for a second that doesn't happen. But later in the summer, the crisis in the situation in the banking industry is still not resolved, and lawmakers are looking to increase deposit insurance on their own without administration input. That debt ceiling bill starts to become attractive, and when that happens, you start to add on other features related to the banking industry, repealing some laws that were passed in 2018, adding some new features into banking regulation. It's very hard to predict, but what you can predict is that lawmakers are going to look at that debt ceiling bill as the way to get their agenda through.
And ultimately, when it comes to the debt ceiling, and both parties are guilty of political posturing going back decades, but unless it's TikTok, there is no bipartisan agreement on anything. Is there any chance that we do not get a deal on raising the debt ceiling?
I think the best way to look at it is that the chances of not getting a deal in a timely way are low. We're probably going to get a deal, but those chances are uncomfortably high, even though they're low. And the longer this goes on, the more chance that there is for a mistake, that somebody drops the ball between the administration and Capitol Hill. The votes on Capitol Hill are going to be very tight. You have a Republican Party with conservatives that are pushing for aggressive spending cuts. Democrats are going to resist those. Neither party wants to look at revenue raisers, tax increases. There's not a lot of commonality yet. I think we could see something similar to 2011, where we kind of went through most of the year. No impact in the markets until we got past July 4th, at which point people looked around and realized they could actually mess this up. They could drop the ball on this. Then the equity market sold off substantially in July. And that move, that volatility in the markets is what really forced Congress to finally act. So a lot of times it's market action, market pressure that actually gets Washington to act. But that volatility is something that gets Washington there. That's something that investors have to think about as we get closer to the summer.
Brian, what about some of the political pressure that we have certainly seen on the Fed, especially over the last couple of weeks when we're linking the Fed here to the stress that we saw in the banking system? Because a lot of people were asking how Silicon Valley Bank got into the mess that it was in, why it was taking so much risk. Do you think that pressure, political pressure on the Fed, could that potentially increase even more?
I think it already is starting to increase. I don't know that we're ever going to get a point where the Fed is radically reconstituted, reformed, if you want. But calls to break up the Fed, to audit the Fed, they're already starting. You have a handful of lawmakers in both parties that have been critical of the Fed's handling of monetary policy. This does, at first glance, seem to be a supervisory failure, and the Fed is both central bank and banking regulator. And so I think that the pressure and the calls from Capitol Hill to look at the Fed and make changes to the Fed, those are only going to grow. Do we get actually to a point where Congress changes the law on the Fed? They make big changes at the Fed? I'm kind of skeptical. But look, we have this a group of progressives in Congress among Democrats. You have this rising group of populists among Republicans who are very critical of the Fed. You could kind of have an interesting dynamic here. We're talking, Dave mentioned bipartisanship before. Here's a bipartisan way that lawmakers can come together. It's attacking the Fed. So it's very interesting political dynamics.
Anytime you've got Senator Scott, Rick Scott, and Elizabeth Warren working together. There is something interesting happening. You found
that's exactly my point.
Yeah.
Yep.
All right, Stifel's Brian Gardner. Good to see you, sir. Thank you.
Thanks, guys.
Coming up, shares of Redfin soaring today as mortgage rates fall for a second week in a row. We'll break down why lingering concerns about bank failures are pushing mortgage rates lower when we return.
Time for a triple play. 3 stocks that we're watching in the final 30 minutes of trading. We've got Walmart, Snap, and Redfin. Let's take a look at Walmart because reportedly the company is cutting positions as it invests more in automation. This is all according to Reuters. The retail giant scaling back on some of its staffing at a few e-commerce fulfillment centers, if I can get it out. Right now, about 200 employees are going to be impacted, but Walmart will reportedly make similar changes at a number of centers across a couple of states here, ultimately affecting hundreds of more jobs. Now, Walmart says that it is working with its employees to find new positions within the company. So the retail giant is making some tough decisions here. We have seen a number of its competitors, including Amazon, axe thousands of jobs. It's been able to avoid layoffs of that size for now, but Josh, we certainly are seeing the retail landscape change. These companies need to make strategic decisions. A lot of that is investment in tech, investment in automation, and some jobs are being eliminated as a result.
And it's only a couple hundred jobs. You don't want to make a big deal about the automation note there, but it is interesting, right? To cut human jobs for automation. It reminded me yesterday, or of what NVIDIA CEO Jensen Huang told us yesterday, with this rate hike environment, as companies try and cut back, one way to do that is computing. Of course, he's talking his own book a little bit there with AI, but it is interesting to think about that, right, Dave, and what AI and what automation could do to help jobs in that way. Again, only a couple hundred jobs, but still it looks like that might be what is being used here to some extent, automation.
Well, and on that note, I've just been surprised that Amazon hasn't had more targeted layoffs in the e-commerce section because that's where they exploded. They doubled their headcount in that 2-year period, and we've seen even the most recent layoffs were not anywhere near e-commerce, which served as a surprise. And I think those are, I hate to say it, I do think they're probably coming at some point this year, but also layoffs. Accenture laid off 19,000 today. Indeed laid off 2,200 or 15% of their workforce today. Glooming economic backdrop continues to appear.
We stopped talking about banks for a day, and then all of a sudden we're back on the layoff story, right? And it's still happening, though. Yeah, no, it's still happening, though, and it's something we hadn't talked about, it seemed like, in a couple weeks, but it's back. I want to take a look at social media today. You see Snap, Pinterest, Meta, Yelp even, all trading higher. That's, of course, as the TikTok hearing is ongoing in Capitol Hill, but also Snap, clearly the leader, and it appears to be because of a new business unit titled AR Enterprise Services. They're calling it, I believe, Ares, A-R-E-S, like the Greek god, and it provides Snap's AR technology suite into each company's own apps, websites, and physical locations. So Snap has dubbed it the shopping suite. And really what this helps you do is you can try on a pair of sunglasses, you can maybe try on some shoes. It's sort of like, it's like the Snapchat filters, right, guys, that we all play with, and you can turn yourself into maybe a dog face, or you can put sunglasses on yourself, and it's so you can try it on. I thought it was interesting. One of the websites they cited said that they had a 25% reduction in returns. Another website said that they had sales go up because people could try it on. Have you guys ever tried something like, I've tried it before with sunglasses. I thought it was hard to see if they fit your face.
Say how well
That's the point, right? Is so you can see if it's too big or too small. I didn't really think it worked for me, but I do think it's interesting innovation.
I love it. We tried Halloween costumes. What was that?
We did. I forgot
not too
about
long
that.
ago. And I think it is a tremendous advancement for people like me that do not like to go shopping and also don't entirely trust online shopping. So I think it's tremendous. But overall, I just think Snap's probably second to Reels in terms of the beneficiary of a potential TikTok ban. And talking to young people, I don't get Snap, obviously too old, but they say Snap is the thing that is closest to TikTok in terms of emulating what that is. Reels, obviously a much bigger user base having Meta, but I think Snap could be a huge beneficiary if in fact this momentum continues. On a side note.
Certainly, and our friend Dan Ives of Webbush, he was saying that Snap was one of those companies to benefit. Also Meta, obviously pointing to what you were just saying with Reels. I think this is very smart, though, going back to this AR technology, what Snap is doing here for its business, because the big criticism for Snap is the company needs to come up with more ways to diversify its revenue. Simply growing the app, not expanding the app, is not going to do the trick. So this adds another line of revenue here for the company. According to Snap, 250 million people use their AR capabilities, so they certainly have a lot of experience in this space. We'll see whether or not it makes a difference in the long run.
It's something we've talked about time and time again, I feel like. What are they going to do to diversify that revenue stream? It wasn't cameras, it wasn't drones,
the
right?
drone and the camera really did well.
This feels more immediately applicable and like something that people will use.
Yeah, I think it's a good move. All right, my play is Redfin. That's a trending ticker on Yahoo Finance. Shares of the online real estate platform and brokerage surging today on mortgage rates heading in the opposite direction. The average 30-year fixed falling to 6.42% the week ending March 23rd. That's down from 6.6 a week prior, according to Freddie Mac. Said their chief economist, Sam Cotter, quote, mortgage rates continued to slide down as financial market concerns came to the fore over the last 2 weeks. Now, for a little context on the rates, well down from north of 7+ in mid-November, but up dramatically from 4.42% 1 year ago. Redfin shares recovering from a rough 2022. They are up almost 8% today and up 100% this year. They were up 10% earlier this in the day. You can see how they've fallen a little bit towards the close. But what we've seen is week to week, these types of mortgage rate moves are spurring activity because there's so many people sitting on the sidelines waiting for any type of momentum to get back engaged that it tends to move the real estate market quickly.
It does tend to move. We've seen that reflected in applications. I think the big problem, though, holding back the real estate market is listings, is the inventory issue. Because still, according to Redfin, their latest read, the February numbers, listings or inventory levels are at the lowest level that they've been since the start of the pandemic. So many sellers are still not listing their house. What's going to get them there is the big question. A lot of them locked into those lower mortgage rates that we saw during the pandemic. So we'll see, obviously, a reduction in mortgage rates. Good news here for potential buyers, but it's the available homes that's also an issue.
Yeah, I was looking at, when thinking about this, looking at some of the data from the Census Bureau in terms of building though, right? And you're starting to see that curve come up a little bit. Mm-hmm. Buildings were up almost 14% in February, and then housing starts were up almost 10% in February as well. So you had that coming down for a while, leveling out, now starting to turn up. You wonder, those people aren't going to sell their homes right away, but how that starts to sort of maybe get the market back restarted, right? Kickstarted.
Yeah, we're at 2.5 million about in terms of inventory. A healthy market has about 4 million in this case. So yeah, we're well short of a healthy market. Isn't that a great T-shirt on Josh Schaefer?
He does. I love it.
Fantastic.
I love the color.
New look, you know,
and a new sports jacket.
I'm trying to
talk
emulate
about
Dave.
the full outfit.
I've been trying to emulate Dave, you know.
There we go.
That is a bad idea, but you look good.
In between here. All right. Josh, thanks so much for coming on here with us. Well, coming up next, Coinbase shares falling after receiving a warning from the SEC, and that also caused Oppenheimer to downgrade the stock. We'll speak with the analyst behind that call when we come back. Let's do a quick check of the markets sponsored by Tasty Trade. All three of the major averages holding on to gains just barely, though. The Dow right around the flat line as I'm talking, falling into negative territory. S&P, though, Holding on to gains, Nasdaq by far the outperformer in today's market action, up just about 0.6%. In terms of the sector action, we're seeing outperformance here from communication services and technology. So investors still trying to digest everything we heard from Fed Chair Jay Powell yesterday, also what we heard from Treasury Secretary Janet Yellen in regards to the stress in the banking system, what that could mean for equities here in the near term.
The Securities and Exchange Commission says it plans to take what it calls enforcement action against Coinbase, the latest escalation in its crackdown on cryptocurrency firms. That action prompting Oppenheimer's executive director and senior analyst Owen Lau to downgrade the exchange and push shares we can see down almost 15%. It has been a rough day for Coinbase. Why the downgrade? How significant is the damage for Coinbase here?
First of all, thank you for having me. Yep, this is a rough day for Coinbase. And why the downgrade is a couple of reasons. Number one, the Wells notice. And Coinbase is a good actor in this space. And you can argue that if SEC were to take actions, many other actors may got the actions or get the kind of investigation first. And Coinbase has been operating in a relatively transparent way. So I am actually pretty surprised to see Coinbase get the Wells notice. And to me, this is an indication that there will be more enforcement actions against not just Coinbase, but the whole industry. And then the second reason being, not many people talk about the economic report of the president got published on Monday. And it got actually a lot of the response from the crypto industry. And in that report, the report has a lot of criticism against the utility of digital assets, which is a big change from the Treasury statement from last year.
Oh, and when it comes to the likelihood, though, of passing some crypto-related bills, at least in the near term, is that likely? Or when do you think we'll see a wider crackdown here from regulators?
I actually went to DC yesterday. I attended an event. I talked to some staff members in the Congress and also talked to some industry experts on the ground. My impression from my conversation is the probability of passing a bill like classify which one is securities, which one is commodities, or which agency would oversee crypto exchanges like Coinbase is very low. I mean, it doesn't mean that it won't happen, but based on my conversation, I'm not optimistic about that. So what that means is before we have a regulatory clarity, there will be a vacuum for more enforcement actions. And that's the number one thing I am very worried about.
Where will regulation eventually come from? Will it be the SEC, the CFTC? Will Congress agree on the rules of the road? Where does it need to come from?
It needs to come from the Congress. We need to have a legal framework first. We need to get the bipartisan support. Based on my conversation yesterday, I was hopeful that there may be a new bill coming out next month or so, but you never know. You never count on a new bill coming out and get the bipartisan support from everybody. But the number one thing has to come from the Congress first, and then people can give their opinion. And I mean, the other way is I'm also hopeful that the White House can take the leadership role to coordinate between CFTC and SEC so that we can minimize these regulations by enforcement actions. But based on the economic report, I think that probability is also very low.
No, and despite all these concerns, despite the uncertainty out there, the price of Bitcoin has held up remarkably well. We're looking at it above 28,000 today. Last month, it's been a gain of just over 17%. The last 6 months, a gain of 45%. What do you make of this consistent momentum, essentially, to the upside here in Bitcoin?
So the run actually starts from, I think, 2 weeks ago when Signature Bank went down or got shut down. And that one tells me that people may be worried about the traditional banking system in the United States, and they may view Bitcoin as a safe haven. We can argue that whether this is true or not, but based on the relative performance, if you look at S&P 500 or BKX and Bitcoin outperformed a lot over the past 2 weeks. So this is an indication that people would rather put their money into Bitcoin, which is more like a decentralized network, decentralized system. They don't have a single point of failure, unlike traditional banking system. And I think that sentiment drives that run over the past 2 weeks.
Indeed. All right, just want to make sure we get in the statement from Coinbase. They told us, the SEC staff told us they have identified potential violations of securities law, but little more. We asked the SEC specifically to identify which assets on our platforms they believe may be securities, and they declined to do so. Just want to make sure we got in both sides of this. Owen, really appreciate your insights here. Thank you, sir. Coming up, TikTok's political turmoil. The CEO testifying today against lawmakers over a potential ban of the social media app. We'll check in with Yahoo Finance's Rochelle Akufo, who's on Capitol Hill with the latest surrounding the TikTok hearing. Don't go away.
Welcome back to Yahoo Finance. We've been covering all the action here on Capitol Hill as the CEO of TikTok, Shou Chew, has been testifying, getting a grilling in front of lawmakers here. And obviously the session just wrapped up not too long ago. Joining me now is Max Cohen from Punchbowl News. He was inside the testimony, inside the hearing, and he joins us now to get some more color on this. So Max, first of all, obviously it just ended not that long ago. How was the tone when it started versus how it finished?
Sure, at the start, Chair Kathy McMorris Rogers opened up and said TikTok should be banned. So that was quite a rough start for the company, and it didn't get much better from there, honestly. Throughout the entire 4.5-hour plus hearing, Republicans and Democrats alike bashed TikTok. They bashed its CEO and asked its tough questions about China, about privacy, about US national security. And the CEO, I have to say, did not have answers that satisfied the committee at all.
Because you could definitely tell they were looking for yes or no answers. They were looking for 100% certainty. Anything less than that, you did start to see some of that frustration from lawmakers. I want to ask you about some of the more memorable moments that came up in the hearing. A lot of them actually came from the TikTok videos themselves.
Certainly. One of the most shocking videos we saw was a threat. Someone on TikTok posted a video of a gun shooting and said, essentially, see you at this Energy and Commerce Committee hearing today. That TikTok was posted, according to a Republican lawmaker, more than 40 days before the hearing. It was a direct threat, and it had the chairwoman, the Republican chairwoman, in the caption. That was taken down mid-hearing, and that was a shocking moment for everyone in the room, thinking, was there a threat made on the very attendees in this room, the journalists, the members of the public watching? It was shocking, and CEO Shou Chew had to apologize and said that was taken down mid-hearing.
And the fact that it was up so long ago, it really does speak to the fact that they just aren't seeing the sort of transparency and oversight that they would like to see. I know another moment that stood out for me was in regards to the teen from New York, when they were talking about harm to teens, harm to children there. What was it like in the room hearing that story?
Yeah, that was also shocking. The Republican congressman from Florida, Gus Bilirakis, invited the parents to the hearing, and they were just seated a couple of seats away from me, and they were crying. It was a very emotional scene, and Bilirakis said directly to the TikTok CEO, your platform is leading to the death of children. And that was a very stunning moment, really showing the human cost of some of these videos, according to the congressman.
Because we did see that ahead of the hearing, obviously TikTok, and even in Shoshu's testimony, really painting TikTok as a place for engagement, which it is, and sort of freedom of expression, but then also this other side of it. And the videos, especially for that teen, some of the ones that were coming up in his feed, very, very disturbing, and we did see a lot of lawmakers honing in on that. Were there any other parts of the hearing that drew the strongest reactions?
I think something for me which drew a strong reaction was, Shou Chew consistently said Project Texas, which is a plan to store U.S. data in Texas on Oracle servers. He used that as an example of how they could change, how we could assuage the concerns of these lawmakers. But right from the off, you saw McMorris Rodgers and the top Democrat, Frank Pallone, say this is not good enough. And that set the tone. One of the main rebuttals that Chew had to say, look, we're protecting your data. Democrats and Republicans alike said, this is not going to help us at all. This is actually still harmful. And that kind of set the tone for the very tough reception Shou Chew got.
I mean, do you think Shou Chew didn't do himself any favors in terms of, do people now perhaps look, at least lawmakers, look at this worse than they did going into this?
I think that might be the case. Some of his answers, as you mentioned, they asked for a simple yes or no. He evaded. He seemed like, in the words of one lawmaker, Mark Zuckerberg, comparing another CEO from a big tech company who testified and didn't necessarily make these lawmakers feel any better about the platform. So I think probably some more negative reactions just based on him being evasive. Another moment, he was asked to condemn the Uyghur genocide happening in China, and he simply wouldn't answer yes or no whether he would condemn that. And that rubbed a lot of lawmakers the wrong way.
And of course, we did hear a lot about the connections to ByteDance, what TikTok would do if they were compelled by China. They went through a lot of different Chinese media laws that said, look, this is laying out, saying that we can compel you to do this. How do you think Shou Chew handled that?
Not great. Again, there's one instance when a lawmaker point blank asked him, are you spying on US citizens on the direction of the Chinese Communist Party? And his response was, well, I wouldn't call it spying. And that again led to some shocked reactions within the hearing room, even a scoff among the media section. I heard someone just kind of laugh and say, that is not the right way to answer this question if you're the TikTok CEO.
And I do want to ask you, I mean, obviously, these were tense interactions, and we did see Shou Chew get interrupted several times. Do you feel like we heard enough from him? Or perhaps could we have heard more from him had he not been cut off so much?
There was a lot of hostile cutting off, and I think that's par for the course, honestly, for today's Congress. In a polarized atmosphere, people do want to get their talking points off at the detriment of hearing the witness. But I would say even more than anything, it was a bipartisan day. Democrats and Republicans were united in condemning the TikTok platform. So although I think, as you mentioned, cutting off the witness, that's par for the course. What wasn't was how equal the message was, I'd say, from both sides of the aisle.
Certainly something rare to see in these times. I do want to ask you about Representative Obernolte, because he was able to hone in on some of the more technical aspects of the code and the algorithm, being that he's the only, I believe, lawmaker here with a graduate degree in AI. What did he hone in on in some of those technical aspects? And do you think when you do have just sort of one person who can really have that one-on-one conversation, that it does make it difficult to really sort of chart a policy like this?
Yeah, I think we saw Obernolte ask consistently about the source code. How much code did TikTok have and what the algorithm was doing? I think for the other politicians, you'd see them ceding their time to that congressman so he could ask more technical questions. But even he, Obernolte, talking about technical things, not political gotcha questions, even he got frustrated by Shou Chew because he was asking some specific questions about how much code, how many lines there were. And the CEO just was evasive. And that was a consistent thread, as you've mentioned, just not giving straight answers and leaving lawmakers frustrated.
And when people don't know the expanse of the code, it's hard to say what's transparent, what's not, what's being shared. So a lot of frustration there. But as you mentioned earlier when we were talking, at least it ended on a positive note, at least, that people can, when you talked about some of the mood in the room when it ended for lawmakers, at least shaking hands, at least with Chew at the end there. Max coming from Punchbowl News, thank you so much. All right, well, we have more Yahoo Finance coming up. Do stay with us after the break.
All right, just a few minutes away from the closing bell. That's time to bring on Yahoo Finance's Jared Blickery to break down the market action. What are we seeing, my friend?
Yeah, we got the Dow and the S&P back in the green, Nasdaq up more than 1%. Let me just show you, it was a little bit harrowing, stepped into the red in the other indices, almost in the Nasdaq here, and we can see we are well off the highs, but still up more than 1%. And let's take a look inside the market here. As far as the internals are going, it's basically tech and communication services that houses Meta and some of the other, I guess, tickers that would be affected by the ongoing TikTok hearing. But beyond that, really not a lot happening. In fact, most of it is to the downside. Energy down 1.3%, utilities, financials, real estate all off more than 0.5%. And let's take a look inside the Nasdaq 100, which looks a lot better than the Dow. You can see some red spots, but for the most part, especially the mega caps, really seeing some outsized gains. Nvidia up almost 3%, Meta more than 2%, so is Alphabet and Microsoft. Apple hanging in there as well. And let's take a look at some of our leaders as we, it looks like we're in the final 30 seconds here. Bitcoin, what a day coming back there. K-Web internet stocks over in China, those are doing well. And then the chip manufacturers here, AMD and NVIDIA have been leading the way this year. They're up another 2.5% when you consider that index. Banking stocks, though, taking it on the chin. Once again, KRE down 2.7%. Let's take a look at some of the bigger banks here. UBS down 6%. We know that they're still in the process of completing their merges with Credit Suisse. But there's your final bell.
All right, well, that does it for today's trading action. Checking in on how we close this market check sponsored by Tasty Trade. All three of the major averages looks like we're going to hold on to gains as we shake out the final trades. Dow closing up 73 points, well off the highs that we saw earlier in the session. S&P up about 0.3%. Nasdaq closing up just about 1%. The gains that we saw today being led by technology, communication services, a number of the chip stocks also trading to the upside. Nvidia, one of the winners there. On the flip side, underperformance once again in many of the bank stocks. The larger banks under pressure. Bank of America here closing off just about 2.5%. Morgan Stanley off about 2% as well. But regionals under pressure for another day. First Republic, PacWest among the names there closing in the red. All right, well, the big story of the day is TikTok CEO testifying before lawmakers on Capitol Hill. And the term Project Texas, it was tossed around a ton by both TikTok CEO Shou Chew and also lawmakers during the hearing. Take a listen to what we heard.
American data stored on American soil by an American company, overseen by American personnel. We call this initiative Project Texas.
I still believe that the Beijing Communist government will still control and have the ability to influence what you do. And so this idea, this Project Texas, is simply not acceptable.
Yes or no, do they have access to user data?
After Project Texas is done, the answer is no.
So what exactly does this all mean, Project Texas? Ali Garfinkel has the answer for us. Ali, what can you tell us?
Hi, Shauna. So Project Texas, in short, is a plan at the very center of TikTok's efforts to stay in the United States. And that's why we're seeing it come up over and over and over again in this hearing. It's a $1.5 billion initiative that's aiming to establish American confidence in TikTok's operations and security, right? So there are a couple of central features that you're going to see here on the screen. The first is that it's creating a new subsidiary, right? TikTok US Data Security is what it's called. And that subsidiary is going to operate completely separately from anything ByteDance owns. Second, Oracle. Now, Oracle is actually a really key part of the Project Texas story. Project Texas actually gets its name from Oracle, where Oracle's headquarters are in Texas, Project Texas. Oracle is allowed to review TikTok's code and software under Project Texas. It also means that once Project Texas is completed, all US data traffic that happens on TikTok will move through Oracle's cloud system. Oracle has fundamentally signed on as a partner, as a co-signer on Project Texas, and that's a really important part of the process. And the last important part of the process is that there will be ongoing moderation from CFIUS. Now, CFIUS is the Council on Foreign Investment in the United States, and they've been working for TikTok over the past few months to really build up this plan. Now, today lawmakers were very unpersuaded about Project Texas, to the point where sometimes Chew was even accused of deception. But we learned a lot. There's a lot of skepticism about Project Texas in Congress fundamentally, and to an extent that, frankly, I didn't know about. As an example, I think California Republican Jay Obernolte actually articulated his concerns really clearly and really well. Take a listen.
My concern, Mr. Chu, is I don't believe that it is technically possible to accomplish what TikTok says it will accomplish through Project Texas. I just think that there are too many backdoors through that process to allow that to be possible, and I think a malicious actor would succeed in inserting malicious code in there if they wanted to.
So that skepticism that you're hearing from Nolte was repeated throughout the hearing, and I think that's why lawmakers were handling away at it. There's still a lot of suspicion surrounding the program.
No question about that, Allie. And based on what you're hearing today, how likely is it that Project Texas will actually be successful?
That's a really good question, Dave. So there are two parts, right? On one hand, you have lawmakers who are unanimously opposed to and skeptical and don't believe in Project Texas from both sides of the aisle. I've talked to some cybersecurity experts about it, and they're often mixed. And then you have Oracle, TikTok. Oracle has signed on to something, and presumably they've signed on because they believe in it. TikTok, on the other hand, has invested $1.5 billion in this plan. So clearly they think it can work. I'd like to actually note a statement from TikTok. They actually feel like they didn't get to say their piece on Project Texas today. What Brooke Oberwetter sent us from TikTok was, the day was dominated by political grandstanding that failed to acknowledge the real solutions already underway through Project Texas. I should say, as a viewer, candidly, I felt like we heard more about Project Texas from lawmakers than from Chu himself. The clearest moment about Project Texas to me was actually a moment when Representative Peters asked, does the Chinese government need to approve Project Texas to agree to it? And Chu said, we do not believe so. That said, it still only clears up so much, right? So I don't know in the end, Dave. But what I do know is that for TikTok, Project Texas is everything. It's their way to staying in this country, and there isn't a really good plan B.
Yeah, it's interesting because this was a lot like the Facebook hearing, same type of anger and outrage, and you can remember it just kind of wore away, right? It was a shiny object. Nothing ultimately ever came of it. Not saying that'll happen here, but that is what Congress typically does. Allie Garfinkel, great stuff. Thank you. TikTok CEO showed Chu in the hot seat today indeed. Congress grilling the social media exec over whether or not the app can be trusted. 150 million Americans use the app. Many of those Americans are content creators who earn a significant portion of their income through TikTok. So what's at stake if a ban gets through? Joining us now is makeup content creator Marjan Tabizada, who has 3.6 million TikTok followers. Also with us is LTK co-founder and president Amber Vance-Box. The LTK platform lets content creators make their posts shoppable, earning them money for branded content. Nice to see you both. Appreciate you being here. Marjan, I want to start with you. You both watched the hearing today, and we want to get both of your reaction to it. Marjan, first with you. How did that make you feel today?
Well, thank you so much for having me. So yeah, I watched the live briefly on TikTok, actually, on your guys' Yahoo Finance live that was going on. I just really wish that they would let him speak a little bit more, because it would have been nice to hear him, nice to hear him and basically hear everything that he had to say. From the videos that I did see, I feel like after watching, CEO Chu talk with Congress, I believe, he's very open to working with the U.S. in making TikTok more safe when it comes to privacy and safety.
Amber, how'd you feel watching today?
It was a monumental day for our industry, and at LTK, we really welcome the regulation that we are hopeful might come behind this. I think that it's, looking beyond TikTok into all of the platforms. I think they would even welcome that regulation themselves. We see it as a future-proofing exercise in making a place where my young children can have platforms to go to in the future that are productive, educational, allow them to connect with people. And so I was actually excited to see the enthusiasm and the preparedness of the speakers today.
Marjan, you have a massive, massive presence on TikTok. Over 3 million followers, 3.6 million followers. I want to play for everyone a mashup of some of the videos that you post on TikTok.
To all the people who suck at makeup and want to get better but don't have anywhere to go, I'm gonna help you. Get ready with me for my parents' anniversary dinner. Foundation, I'm using my current favorite, the Givenchy Prisme Libre. I found the reddest lipstick ever, and it's from the drugstore. Let's test this out. This lipstick is $3 from the brand Essence, and oh my goodness, I'm obsessed.
So Marjan, full confession here, I was watching your videos before you came on the show and I got a little lost because it is very addicting, really speaking to some of the issues that TikTok CEO was facing today. If TikTok was to be banned in the US, what impact would it have on you as a creator?
You know, my biggest concern about a potential TikTok ban as a creator is just seeing all the time and effort that I've put into building a community on TikTok go away. You know, I absolutely love TikTok and how well the platform brings everyone together. I've met some of the best people who I, now consider great friends. And overall, I would just hate to see it go.
And Amber, what are your thoughts about a ban? What would it mean to your bottom line and to the creator economy here in the United States?
Well, we started our business back in 2011 so that me and my friends could make money online as fashion bloggers. And over the last decade, what we've seen is a history of platforms either, dissolving either because they're culturally less relevant or because there's engineering changes. You think about like Vine being shut down or, algorithm changes or deprecation of certain features on platforms. And so during that time, our creators have really successfully migrated their business. And actually, Marjan is a great example of that. She has almost 1 million followers or more on every single platform. So she's a really talented individual who can use those skill sets on whatever platform is next. And LTK was built engineered specifically for that migration over time to future-proof our creators' businesses. So it's a place that's differentiated, it's focused on shopping, they bring their followers there. So whether they stay on the platforms that they are today or they find something new, they have a home base to bring them to that allows them to support themselves and their families through their unique passions.
Marjan, you've got a heck of a lot of followers. I would guess that you would take a pretty big hit money-wise, financially, if TikTok were banned. What does that look like?
Personally, I don't think my income would personally be affected drastically, possibly between, 20 to 30%, if anything. But at the end of the day, the value is in the content creator, it's in the content, and brands know that, and they will work with you on different platforms as they already do. So.
Amber, what platform best emulates TikTok, and which platform do you think would stand to benefit the most if there were a ban?
Well, I'm glad that you call out the content type on TikTok because specifically they've really changed the paradigm in the entertainment space. TikTok is the one that brought really short form video to life and also AI-driven feeds, which we see emulated across large and scaled products today. And I expect for that to continue to be in future chapters of the platforms that we're seeing. Today, the products that most likely emulate that product would be, Instagram Reels or on YouTube Shorts, but there will always be a next platform as well. And I expect for it to be kind of backwards integrated into other existing platforms.
Marjan, what's second best? If TikTok were to be banned, where would some of your followers, your massive following, go?
So I feel like I would personally do exactly what I'm doing. The beauty of being a content creator is being able to do it on any platform. I have a pretty big following on, Instagram as well as on YouTube. This personally wouldn't change my content. I also don't believe that if the platform is gone, this would affect brands or their budgets. Brands will still be working with creators on other platforms. But again, I personally would, go back to, Instagram or, there's YouTube Shorts, there's Snapchat. There are other platforms.
Amber, one thing is clear. We do not know what the Chinese Communist government is doing with the user data of 150 million Americans. But it's also pretty clear they could do whatever they want with it if and when they decide to weaponize that user data. How concerned are you about that?
Well, I believe that government exists to protect its citizens, but I also, believe with that our creators are very resilient in the same way that she was just speaking to, where they're going to move to whatever platform that their consumers want to be at. I think that consumers have been now trained to use a certain period of their day on free entertainment. And so just because a certain platform is taken away, I think that they're going to still want that and they're going to find a new home for it, and creators are as well.
But you're not concerned about privacy and about the user data and what the Chinese government could do with it?
certainly. And I think that we've seen that our other Western partners, for example, in Europe, starting back in 2017, around the time of when Mark Zuckerberg was actually testifying, they introduced GDPR, which was a protection for their own people around their data and their privacy. And they've really set the standard in the Western world for what that looks like. I'm personally very motivated that our own domestic government could be doing the same for our people. And I think it's important to the future of our mental health, of our cyber health, of the health of our entire country. And so I look to the government to protect its citizens, which is what I believe that they're charged to do.
For them from Show True today as well, just talking about some of the inefficiencies or some of the U.S. Social media platforms falling short. Marjan, I'm going to ask you a very similar question. How worried are you about the access of the data and everything that TikTok has on you?
You know, I genuinely completely agree with Amber. I'm on the same page as her, and I feel like if it is something that is at a great risk for all of us, then it only makes sense. But I do believe that the way the CEO talked today with Congress, I feel like he's definitely open to working with the U.S. and making it more safe than it already is, especially when it comes to our privacy and safety.
All right, Marjan Tabibzadeh and Amber Vens-Box, we really appreciate both of you being with us today. Thanks so much.
Thank you.
Coming up, several lawmakers are looking to ban TikTok, but New York Congressman Jamal Bowman is not one of them. He tells us why. And we'll talk to the Panera brand's CEO about the state of the consumer and how the company is fighting inflation. Stick around.
TikTok CEO Shou Chew facing some tough questions from lawmakers today while he was testifying for hours just about the data, national security concerns, also the social impact of his app. Yahoo Finance's Rochelle Akufo has been tracking all of this for us. She's live for us down inside the Beltway on Capitol Hill. Rochelle.
That's right, Shauna. So, I mean, one of the people who was really an opponent of this, he didn't testify today, but all along he's been saying, look, some of these lawmakers are really rushing and being too hasty in trying to ban TikTok. Here's a look at our conversation with Congressman Jamal Bowman.
I think we're moving too quickly to a conversation about a ban without having a real conversation about what's happening with TikTok and what's happening within the social media ecosystem. If the issue is data privacy and security, if the issue is data mining, if the issue is our data being sold to foreign countries or foreign companies, that's happening already on every social media platform. So why are we scapegoating TikTok? And one of the things that's been happening over the last year is this entire fear mongering around China. You know, China as the boogie person. And if that's the case, show me evidence that that's the case, but don't isolate or single out TikTok when all of the other social media companies, American companies, have done the same and or worse when it comes to data sharing.
Because when I did try and get specifics from lawmakers about concrete evidence that they've seen that perhaps the CCP has found something or is using it nefariously, it did seem to be more about the speculation, as you mentioned. Yeah. You called it the Red Scare in your press conference the other day.
Yeah.
Why do you think that's the focus, being that we still do have other Chinese apps that aren't being targeted, as well as you mentioned, social media companies?
I believe hundreds of Chinese apps on our phones right now that could be gathering information that's shared with China that's currently in play that we're not talking about at all. I don't know. Facebook, it is well documented that Facebook looked the other way and allowed Russia to interfere in our 2016 election without telling anyone in real time as it was happening. It's being speculated that Elon Musk and Twitter are sharing our information with foreign adversaries. So let's investigate the entire landscape. I'm an educator. I care deeply about privacy. I care deeply about security. There are data brokers right now who are exchanging our data, trading our data, selling our data on all platforms. But we're not talking about that. We're just talking about TikTok. It's disingenuous, and governing shouldn't be done in this way.
And you have been really calling for an honest conversation about this, because as you mentioned, if it's ending up through third parties in other countries, a ban really then wouldn't do any good then.
It wouldn't.
So what would the purpose of a ban be then?
It would show that we are strong on China. We love being strong on China and strong on our adversaries, and it's more of a facade. And it's more about creating the perception of good governance. Good governance is protecting the American people, and we have done a terrible job at that because we still have people dying because they don't have health care. We still have children going to bed hungry. We had an insurrection just 2 years ago, and we have American social media platforms that's allowing our data to be bought and sold around the country. That's currently happening. These are facts. We have to get our own house in order and stop thinking that we need a foreign foil to be the best America that we could be.
And we did hear in testimony from Shochu that he talked about the positive aspects of it. And when I talked earlier to Congressman Obernolte, he said that you mentioned that I talked to him about the 5 million businesses that are on the platform.
Yep.
And a lot of people saying, look, this has been a boon for my livelihood. What do we do?
150 million Americans.
See?
Many of them young people. Many of them learn about politics and how Congress works from TikTok. You're going to take that away and force them onto other social media platforms who are still going to steal and sell their data while also giving you, in my opinion, more vitriol and hate and misinformation. Because on my TikTok feed, I receive much less hate, much less vitriol, much less racism, and much less misinformation on my feed. On the other platforms, I get that all the time. It seems to be, and there might be some evidence to this, that TikTok is just a better product than these American products, and American companies are now organizing to get rid of that better product so they can make more money. That's how our toxic capitalist system works.
And you did hold a press conference really about free expression, and you had a lot of content creators there on TikTok who wanted to have their voices heard. What's been the reaction? Because we get the impression that, at least from the testimony today, that it's the people who are pushing for this.
Yeah, it was very powerful, first of all. I got to meet so many people from all parts of the country who discovered their voice and found a place to share their voice and uplift their voice and connect with others around the world that they never would have connected with. They found a space where they are comfortable sharing their experiences and bringing people into their lives in a way that help to build community. So TikTok as a caring community specifically for marginalized people is a powerful thing. It's what Facebook and Twitter and other places were supposed to be before the hate came in. We still have issues with safety and security on TikTok and everyone else. Let's deal with that instead of dealing with them as the boogie person that is trying to, facilitate Chinese espionage without any evidence whatsoever.
And we know that a number of lawmakers have put forward bills to try and address this, not just for TikTok, but for the broader industry. What do you think then would be some good key elements that would really at least offer some of the protections that lawmakers are looking for?
So the European Union has an example of this. They have a national privacy piece of legislation for the whole EU. We need something like that here. There's no federal legislation on privacy and security. That's what we need to be focused on, number one. Number two, big tech as a monopoly needs to be dealt with. And we introduced legislation last Congress. We haven't moved forward with that piece of legislation. Also, the harms of tech, some of the addictive natures regarding the algorithms, because many of the algorithms want you to stay on tech as long as possible. We need to deal with that issue as well. There are real issues to deal with. Let's deal with the real issues for all tech and not just, again, scapegoat one company.
And one of the lines that stood out from the press conference, you said, maybe Republicans don't like TikTok because they don't have swag. Now, I know that you put that in the context of really engaging with young people. Yeah. Talk more about that and perhaps the opportunities you see there.
So many opportunities on all of social media, but most young people right now are on TikTok. Everyone was predicting a red wave for the 2022 elections. The red wave didn't happen. It mainly didn't happen because young people came out in droves to vote for Democrats and help us push back against a MAGA agenda. Many of those young people we've connected with on TikTok. I have 11-year-olds, 10-year-olds in my district who follow me on TikTok and love to learn about what's happening here through my TikTok account. So let's make it better instead of banning it. And let's not miss this opportunity to make our democracy stronger. And what I meant by the whole swag comment, Republicans don't know how to connect with young people. They struggle. Even some Democrats struggle to connect with young people. So do the work of democracy. Stop trying to suppress voices and votes with your ban on TikTok and ban on books and ban on trans in sports. And they just want to ban everything. And when you ban things, you silence people. When you silence people, they're not going to vote. And you can't win on the issues. So the most you can do is suppress their vote.
So Congressman Bowman there really is one of the few voices, one of the only voices that we've heard that does oppose a full ban on TikTok, or at least having lawmakers do a bit more homework and perhaps do a bit more homework at home at some of the US companies, the social media companies here that pose similar threats rather than just targeting TikTok. Back to you guys.
Yeah, Rochelle, we also heard, though, a lot of support for the ban of TikTok within his own party as well. So we'll see how this all plays out. Thanks, Rochelle. Well, you can now pay for your Panera sandwich with the palm of your hand. You've heard that right. The restaurant chain partnering with Amazon to test its palm reading payment technology. See it right there on your screen. Right now, it's only available in 2 St. Louis locations. We want to bring in Naren Chowdhury, Panera Bread's CEO. Naren, a lot to get in with you today. But first, let's start with this technology, because I think a lot of people, Brooke DePalma is also here playing in this interview as well. But Naren, how exactly does this work? Because it might scare a lot of people.
Yeah, thank you. It's great to be on the show. Well, we are very excited, but we are the first restaurant company to partner and launch Amazon One for loyalty identification or payment transactions just using a scan of your palm. We're excited because we have more than 50 million MyPanera members in our loyalty program, and this just provides another level of convenience and personalized service for our guests. So it's another one of the first from Panera, leveraging technology to delight our guests.
And just to get a timeline on this, what are your expectations and when do you expect it to become a common way that customers pay for their Panera?
I think use of biometric identification is happening all around us, as we know, on airports, et cetera, and supermarkets already. So I just see this as a natural evolution of using biometric technology to drive convenience, loyalty identification, and payment. So I think this is going to spread pretty quickly.
This is clearly one indication, but just about every restaurant, sir, has come out of this pandemic different. They have evolved in some way, shape, or form. How are you a different chain than you were 2 years ago?
Oh, yeah, we have evolved tremendously. I think we are a much stronger brand. We are more convenience-driven in terms of off-premise convenience. We are more digitally savvy. And we've also done a lot of innovation to make the brand even more relevant to our guests across all multiple day parts. So I think we're a stronger brand, more convenient, more accessible, more distinctive for our guests. And that's our mindset. You know, we look at any kind of a macro event that is happening as a way to become a catalyst for us to up our game and serve our customers even better than we've done before.
And another key theme over the past year has been inflation, particularly food inflation. We've seen egg and bread prices higher. Has Panera Bread had to raise prices? And are you seeing lower ticket sizes?
Yeah, I think the macro environment with inflation, supply chain disruptions, et cetera, continues. I think it's a very uncertain, choppy environment out there, very difficult to really predict where this will land. So our approach is to actually use pricing as a strategic lever to cover not only our food inflation, but also the labor inflation, the labor investments that we need to make to take care of our people. So we are pricing to cover both of those elements. And in fact, I think the results have been very strong. So we are able to actually retain our people. We have best-in-class people metrics, very low turnover rates for our cafe general managers. So our cafes are properly staffed. The consumer demand for our brand remains relatively strong. And therefore, we continue to have a pretty strong start to the year, although we are very aware that it's quite hard to tell how this will turn in the latter half of the year.
Narendra, have you seen any pushback from those higher prices?
You know, we are perhaps one of the few chains that is seeing a growth in our foot traffic and transactions. And the reason is that as we raise prices, I think it's very important to give value back to our guests in some distinctive way. And we do that all the time. So we recently launched a very disruptive value play called the Unlimited Sip Club, wherein we offer unlimited access to our beverages for $10.99 a month. So when the guests are coming to the cafes using this Unlimited Sip Club program, they already feel that they are actually saving and they're benefiting from the value initiative. And those initiatives in combination with pricing is very important for us to ensure that we are serving our guests appropriately during this time. So we are seeing actually a growth in both our ticket, but also our transactions, which is good to see.
And speaking of this macroeconomic environment, it truly seems like Panera is waiting for the right time to go public. What can you tell us about the status of that public offering, and can we expect to happen this year?
I think it's very hard to really say. As you know, the environment continues to be very difficult to predict. So I think we're watching it very carefully, and we will take an appropriate decision at the right time.
Ren, is it still an opportunity to go public given the uncertainty that's out there right now?
I think in the near term, I think it's very hard to sort of to think about what the right timing is. It certainly remains our intent, but I think the timing is uncertain.
Naren Chowdhury, always great to have you, CEO of Panera. Thanks so much. And of course, our thanks to Brooke for joining in as well. We'll be right back. do a quick check of the market, see where things close. This market check sponsored by Tasty Trade. All three of the major averages holding on to gains. The Nasdaq, the leader here, closing up just about 1%. Technology and communication services, the outperformer in today's trading action. Dow closing up 75 points. S&P up about 0.3%. We saw some volatility in the trading day as investors were digesting what we heard from Fed Chair Jay Powell yesterday. The comments from Treasury Secretary Janet Yellen about the stress in the banking system. What more maybe will or will not happen when it comes to regulators intervening if we do, of course, see more stress there from some of the regional plays. On the flip side, financials were an underperformer in today's market. Not only the regionals, a number of the larger U.S. banks closing in the red. Well, coming up, a busy summer travel season might be quickly approaching. What airlines are doing to reduce flight disruptions when we come back.
Change up in the Starbucks C-suite. Laxman Narasimhan is the new CEO of Starbucks. Lax, as baristas know him, already set the tone on how he will lead, spending the last 5 months visiting stores, manufacturing plants, and support centers around the world. So what do we know about the first external CEO of one of the world's most popular coffee chains? The 55-year-old executive was born in Pune, India, where he earned a degree in engineering. He then attended the University of Pennsylvania and received a master's degree in international studies and business administration. He's a Verizon board member, a member on the Council of Foreign Relations, and a trustee of the Brookings Institution. Lax started his career at the consulting firm McKinsey, where he spent 19 years becoming a senior partner. He served as a global chief commercial officer of PepsiCo before joining the London-based company Reckitt Benckiser, the parent company of Lysol. Laxman was credited with boosting sales during the COVID-19 pandemic and led the company through the baby formula crisis here in the U.S. with the Enfamil brand in its portfolio. Over the course of his 3 years as Reckitt's CEO, investors saw the stock rise 8%. The reason he left that top spot? Starbucks. Narasimhan takes the helm in what former 3-time CEO Howard Schultz calls a new era for the company. That new era will likely include working with union organizers, Starbucks' growth strategy, expansion into China, and the rollout of its new olive oil coffee line, Oleato. And the stakes are high. Investors hope Lax's global perspective could drive growth in both mature and emerging markets for the coffee chain.
As I look at value creation, this is the model that is core to the value creation model of the company. And if we do it right, the opportunity set is limitless. And I know what it will lead to is outsized returns for our shareholders.
And you may be wondering, what is his favorite drink? Well, one that will keep you going. A Doppio espresso macchiato with hot skim milk on the side.
Airlines are expecting a busy travel season this summer, and passengers are hoping to have an easy experience boarding their flights. Lucky for them, the Federal Aviation Administration announced a new plan to mitigate flight disruptions at some of the country's busiest and biggest airports. Let's bring in Yahoo Finance contributor Vera Gibbons to discuss this. Vera, nice to see you. So how does this play out?
Yeah, how does it play out? That's a big question mark going forward. I mean, they are taking these steps now because we are anticipating one of the busiest summer travel seasons on record, particularly for domestic travel. And people have been complaining about congestion, delays, changes to their itineraries last minute, poor reservation agents, a poor booking system, all sorts of problems. So they're trying to get ahead of the problem by bringing in DC to try to limit the disruptions. But there are so many other issues plaguing the industry that I just don't know if it's going to be a smooth summer travel season. I mean, the problem is that passenger volume is back up to 2019 levels. It's exceeded it on a couple of months. And the airlines are just ill prepared to handle the volume. So they're really trying to play catch up, and they're dealing with all sorts of staffing issues still, training issues still. Manufacturers can't get enough aircrafts built to keep up with the demand. I think that the recovery in air travel just happened a lot faster than anyone could have possibly predicted. And the airlines are paying the price. And so are we, actually, because the prices are so crazy. I don't know if you've flown lately, but I mean, I fly regularly from Palm Beach to Providence back and forth, and sometimes it's like $614. So I sit around and wait for the fare to actually drop. But the airfares are ridiculous, and the airlines can get away with it because the demand is through the roof.
Yeah, and what could go wrong? Bring in the federal government, it's bound to get better. To your point, airfares surging 27% from a year ago, average ticket prices to popular destinations like Orlando and Vegas up even more. This is setting the stage for what is expected to be a very busy and expensive summer season indeed. Why is there so much demand?
Yes, this does set the stage for what is expected to be a very busy and expensive summer travel season. Like I said, probably one of the busiest domestically. We're also seeing more people interested in going to Europe. People are planning. They plan their trips very early on in the season. They want to get out. They want to get away. Part of the pent-up demand just has to do with the fact that we've been cooped up for so long, and people really want to get back out there and live a little after, these rough couple of years that we've all had. The other part of it is people are combining business trips with leisure trips. This whole bleisure trend that's actually going on. Also, people see travel now as really important to one's mental health, and I think that that's important. It's very good to unplug and get away from your daily stresses. That's taking precedence, and that's increasing more interest in people actually getting away. And then also keep in mind, too, that everybody's working from home. They're working remotely. They can work from anywhere. So they are traveling, during the week, not just the weekends anymore. In fact, I spoke to one travel agent, and he said traveling these days is like traveling on the Wednesday before Thanksgiving every day now, because it's just a constant flow that the airlines have been ill prepared for.
Yeah, it is nuts out there. So circling back to where we started here with the FAA, what can they actually do? How can they actually impact this process, and what is the status of this plan?
I'm not feeling optimistic that they are going to make a meaningful impact on the process, because I feel like the airlines are just so far behind in where they should be in dealing with these issues. I mean, one of the primary ones that we've been dealing with is the staffing issues. They can't get the pilots, they can't get the agents. The training has been sort of lackluster in my professional opinion. I mean, I've had problems with reservation agents, I've had problems with booking, I've had problems with my apps. So I think that the problems are too significant for Washington to actually tackle. They're trying to get ahead of the problem, but given the fact that the volume is expected to be blockbuster for the summer travel season, I just don't actually foresee any kind of solutions going forward. Nor do I actually foresee a lot of whole deals this summer travel season. Those are going to be really hard to actually come by. So the airlines are faced with a number of issues. Then they're trying to tackle them. They've been trying for some time now, and I don't think that bringing in Washington is going to alleviate the stresses that come with traveling these days. I mean, it's just a big headache, but people are more than willing to actually accept the headache, because they want to get away at any cost. And even if it does mean flight delays or last minute itineraries that have been canceled or changing of the seats or anything. And people just really want to get out there.
Yeah, we just keep traveling. Underlying all this, though, the FAA has been for years underfunded, and that's probably not going to change anytime soon. Vera Gibbons,
That's
nice
correct.
to see you. Thanks so much.
Thank
Coming
you.
up, the movie Coda brought Apple 3 Academy Awards in 2022. See how the tech giant is looking to take another major step in the movie industry next.
Apple may be moving some of its content to the big screen. A new report from Bloomberg saying that the tech giant is committing $1 billion to multiple theatrical releases and also is looking to raise the profile of its Apple TV streaming service. Yahoo Finance's Ali Canal joining us now with more. Ali, this has the potential to be massive.
Massive $1 billion commitment here from Apple. According to this report, they are already in talks with potential studios to roll out some of these films for theaters. And really, this is a play for them to get some clout in the game, to really be taken seriously in Hollywood and within the streaming world. They have said that the ideal plan would be to roll out these titles in thousands of theaters for at least a month. And that is a strategy that's differed from what we've seen in the past with streaming exclusives and more limited theatrical releases. Now, this could all change. It's all based on reporting. Apple did not immediately get back to me on a request for comment, but it is massive for the theatrical industry. And that's why we saw some big theater chains like IMAX, AMC, Cinemark, all closing higher today on this news. And it's not just Apple with this $1 billion commitment, because Amazon did it first, at least according to a separate Bloomberg report. Amazon, which did purchase MGM earlier last year, also plans to invest $1 billion to produce 12 to 15 movies exclusively for theaters. And this, comboed with Apple, could help the industry get back to those pre-pandemic levels at a faster pace. According to initial analyst reaction, there's an estimated 20% boost to the box office that could happen as a result of both Apple and Amazon leaning into the theatrical. Currently, ticket sales are about 30% below where they were in 2019. So huge for theaters, and it could also up the ante for a company like Netflix, which has been very resistant to embracing the theatrical release.
We've been watching all day the Netflix stock pop, and everyone's been trying to figure out why. Maybe there's some sort of
Maybe they think this
trickle
could,
down
right.
to Netflix. AMC is up 3%, and I think that is clearly on this news. I think this is such great news from a content standpoint because every blockbuster movie is Marvel, is part 5, part 6 of Creed. And what we saw with Amazon out of the gate is this Air movie that comes out in a couple of weeks that is like the movies that used to be made, great storytelling. And look at what Apple's done. Ted Lasso, the best show on TV, Shrinking. Like, it makes me feel like storytelling might return to the movie theaters. That's just my little soapbox rant. But this is in direct contrast to the cuts we've seen in streaming giants like Disney, right?
It's very interesting. It's an interesting time for media because we're seeing a lot of pullback on spending, but at least for these tech giants, they're not doing that on the entertainment side. Of course, we saw Amazon lay off 9,000 workers. That's in addition to the 8,000 cuts that they did in January. Apple has reportedly pulled back on bonuses, has delayed certain product launches in order to avoid layoffs. So it's clear there's something going on in tech where they're pulling back on content, but when it comes to entertainment, when it comes to streaming, we're seeing the opposite, right? And even Apple with live sports, we have them reportedly wanting to go after English football games, and that's after they signed that $2.5 billion deal with MLS. They have a deal with the MLB, which, by the way, for the 2023 season, you're going to now have to be a subscriber to Apple TV Plus. It's not freebie anymore. So it's just this reckoning moment, I think, throughout all of the streaming companies, and tech's included in that now.
Two of the biggest 5 companies in the world by market cap are going into the movies. That is great news for theaters. Allie, thank you. Good stuff. All right. Coming up, we'll break down some of the biggest takeaways from today's top stories in business. Stick around. Starbucks held its annual meeting of shareholders today. CEO Laxman Narasimhan led the meeting in his 4th day as the official CEO of the global coffee chain. Brooke DePalma here with the details. Brooke, what were your big takeaways from the day? I know there's this big strike that started taking place yesterday on his 3rd day.
On his 3rd day. Now it's the 4th, so we're moving right along. But Laxman certainly is leading into the concept of this being a new era for the global coffee chain. And he started this morning with a letter to leaders where he said that he plans to reinvigorate culture about what it means to be a partner, what they call employees. He also said that he plans to work half a day each month at stores in order to keep him close and Starbucks close to culture and to its customers. And he did say that the refounding of Starbucks, that reinvigoration, is quote unquote well underway. But as Dave noted, this comes at a time where there is that ongoing tension between both Starbucks and the more than 290 company-owned stores that have voted to unionize. And so in a Q&A, when asked about if Starbucks will enter a labor neutrality agreement, the public affairs for Starbucks, A.J. Jones, said it will, quote, not because it will prohibit the ability for us to talk openly and freely with our partners, provide them with the information that they need about the value and importance of relationship with us and how it could change under union representation. Now, of course, one of the proposals that they did vote on today, that is shareholders of Starbucks, was to push the company to agree to do an independent assessment of its commitments to workers' rights. So, of course, that's things like the freedom to collective bargaining and the ability or right to join a union without management interference. We will get the results of the shareholder meeting today in 4 business days. So certainly lots to unpack and lots on Lakshman's plate. But of course, this does come as Howard Schultz, the former CEO of Starbucks, is set to testify on the Hill next week.
Yeah, that'll be interesting after what we saw today, man.
Certainly will.
Although it'll be much more one-sided, the questioning.
Yeah.
I think Republicans are pretty supportive of Howard Schultz.
Yeah, exactly. He's only going to be facing maybe some of those hostile questions from one side of the aisle coming up here in a few weeks. But Brooke, when we talk about some of the items that are on the agenda here for the new CEO, the oleato, I'm saying that right?
You're saying
olive oil infused coffee. We got it on set. We talked about it now, so we got to give it a try. I'm a little skeptical, to be honest.
All right, well, this is the cold brew with the golden foam. Now, I did get this from a reserve, so it does not come in this fancy cup all the time. This runs a bit lower in price, but for this one, it was $9 from our local reserve. Now, this golden foam, it's creamy.
The coffee was $9?
The coffee was $9, I know. Yeah.
Whoa.
But it typically runs lower. It's typically about $6.45 for this one when it does roll out nationwide. So this was introduced today, and then it'll essentially roll out at nationwide Starbucks in the coming months. It's now available in the reserve locations and select locations as well. But they're calling it a lush flavor. And then Howard Schultz said virtually on the call today that has a lingering aftertaste and a
does have a lingering
video.
aftertaste.
So be prepared for that.
I'm surprised how much you can taste the actual olive oil. We actually made one in our coffee bar here at Yahoo, and I didn't taste it. I taste it, and I actually feel it on my lips a little bit. Thank God I love olive oil.
And I did want to point out today that at the reserve, they had this big to-do about it. Amelia was one of the baristas, I guess you could say, who was serving samples. And as she pointed out, don't joke now, Dave.
Good job.
As she pointed out, she said it was like a moisturizer for your lips. And I actually thought that was pretty legit. It's olive oil.
Although I don't know if I want to be tasting my coffee like a moisturizer, but I don't know.
It's not bad.
Initially, I thought it was pretty good. Now I'm a little skeptical. That aftertaste is very, very strong.
Every once in a while, I'd give it a go.
Not for $9 though.
I don't know if it was a gift to Laxman.
Some analysts do
by Howard
worry that it
Schultz.
was not going to be a habitual routine and that it may just be one and done.
We will see. All right, guys. Well, we got to leave it there. We got to drink our coffees. It does it for us today. Yahoo Finance Live. We'll see you back here again tomorrow. Have a good night.